Hello traders. So in this video I just want to show you a pretty simple strategy that I use for short-term intraday trading. So in other words, when I'm looking for trading a range or when there's not much going on in the markets and I want to try and maximize my profits and trade the lower time frames. So for those of you that know me, that follow me, you'll know that I use the ichimoku quite extensively, and this is the one time that I actually don't use it, and it's purely for intraday trading. This is not a strategy that will work on longer time frames. It's tried and tested on the lower time frames, and it has been very successful for me over the years. So the first thing is the chart setup. What am I looking at? So firstly is the Bollinger alligator. So green, red, and blue lines. Reason that's here, it keeps me on the right side of the trend. Okay. So if we're above the alligator, we are trending up. If we're below the alligator, like here, we're trending down. Okay. The second part of this is the Bollinger Bands. So I have these black lines here are the Bollinger Bands. I then have some oscillators. Now, start at the bottom. I have the MACD, and the MACD is the 513.5, and this is purely MACD. I've taken out the histogram. I've taken out the signal line. I have no interest in those two. All I'm worried about is the MACD calculation, and I use this for diversions. That's all it's there for, diversions. Okay. I then have two stochastics. I have a slow-moving stochastics at 45.55 settings, and then I have a fast-moving stochastics at 21.55 settings. Okay. Now, what I'm looking for in the stochastics is I'm looking for a grouping like that, like that, like that. The groupings need to be over or on the 80 or under or on the 20. Okay, so those two lines within the stochastics. And I'll show you now how I utilize that. Okay, so this is pretty much how the chart is set up. Then the next part of this is time frames. So I use two time frames for this, the 3 hour for my levels, and I use the 6 minutes for my trading. Okay, so let's just look at Friday's trade. For this example, I'm using the South African top 40, the Aussie. You can use pretty much anything you want to. It works very well on all the indexes, pretty much. Okay, I haven't tried it too much on forex, but on the indexes, it definitely is something that works. So if you manage to fiddle with it on forex and it's successful, please let us know. Drop us a comment below. Okay, so let's just get some levels in here. So the first level on 3 hour was the day's previous high. So remember, example I'm showing you here is Friday, how we can get in on the trade for the short and the long on Friday. So this candle down and this candle up. We're on the 3 hour time frame. Okay, so first rule of thumb is I'm looking for 3 levels. So the previous high is a level. Now I need to just double check to the left to make sure that we haven't missed something. So you can see how that previous high ties up with these levels here. But I can already see 3 different levels. So there's another one here. So this high here. Okay. And then we have this high here. Okay. And then you can also see that swing high. And then obviously this tail is going to come into play as well. So for this example, let's just stick with those 4 levels now to see what's going on. Okay, so ignore this for now. This hasn't happened. Now what we do is we drill down to the 6 minutes. Now the reason I use the 6 minutes is it's just 1 minute longer on the 5 minutes. It gives me a little bit of a better confirmation of what's going on. Okay. And it's also just double the 3 minutes, and I find that most of the indexes, a lot of trading happens on the 3 minute level. So that's the only reason I'm using the 6. Okay, so let's look at what happens here. So the rule of thumb for this strategy is I need at least 3 triggers or signals. whatever you want to call them. So a level will be a signal that something's about to happen. A grouping of my stochastics to the upside is another example. If I have any diversions on the MACD, that's also another example. Okay? So, and then obviously price action itself is another signal. So the short here is not really well defined on the 6 minute, but I'm going to show you something that I typically do, especially on the Aussie, during the open, and it's just to go down to the 3 minute. But before we get there, let's just have a look here. So we've got a level, another level, another level, and you can see how we hit this level. So that's one trigger. We have a big engulfing candle here. We've got an inside bar, then we've got an engulfing candle. So we definitely have a trigger here. So there's two. There's nothing happening here on my stochastics, and there is no diversions to speak of at the moment. Okay, so what I typically do for the Aussie is during the open is to come to the 3 minutes, and you'll see now why. So that the first, what time was this? 9:15. So that first half hour of trading on the Aussie, the 3 minute often gives you the direction of what's about to happen. So you can see we've got a level, which is correct. We have kind of a grouping on the line. It would have been nice to have a grouping like that, but that is sort of half a signal. But more importantly, we have a double top here on the MACD, and we have price going up. So we've got diversions, we have grouping, and we have a double top signal here at a level. So we've got a level, we've got an inside bar, two inside bars actually. So it's a double top at a level. So that's two. Level one, price action pattern, that's a second signal. Grouping, third. Diversions, fourth. You have a short entry, and your short entry, you could have waited for this confirmation here, is going to be a 100-point stop loss. Okay. Now you can see on the 3 minute it's very clear, but if we drill down to, or drill up to the 6 minute, you'll see that we don't really have a very clear signal here. We've got diversions going far back to there, but I prefer it to be off this high here. Okay, so the 6 minute doesn't really give us the entry. The only really positive part here is off a level and then this signal bar here. Okay, so once you're in on the trade, you're looking for a couple of things. You want to see if we break through the alligator again, which we did. Excuse me. And now what we're looking for is where are we going to? And that is a question you need to continually ask yourself, is where are we going to? And to pinpoint that, we're back to the 3 hour. Okay. Now what we want to know is what levels could we be attacking here? So the first thing to remember is we are in an uptrend. You can see here on the 3 hour, low, higher low, higher low, higher low. We're in an uptrend. Okay, so whatever shorts you are trading are scalps. So your short is in, it's a scalp. Where are you going to? You're looking for the most logical place for it to come to. Now there are two things. Firstly is your Fibonacci. Fibonacci should be part of any strategy you're trading. Okay, so I'm going to just put this level in. I'm looking for the 61.8, which is there. Okay, and so before we get rid of that, it's this move up, right? So I'm looking for this move up to there, and now I want to know where it's coming to. So where's this retracement coming to? And the mistake a lot of us make is we see this and we think this thing's going to fall to the roof. Meanwhile, it's in an uptrend. You can see it's in an uptrend. So you can see that the buyers are stepping in on this trend line here. Look at that. Okay, and I'm sure you've probably found strategies on intersecting trend lines, which is another great example. You can see there's two intersecting trend lines there. So there's always some action going to happen there. This is the uptrend, and that is a 61.8, which is a level. Now, remember, I'm looking for 3 levels. So that's the first one. This swing low here is a level. Okay, and it sort of coincides with that swing high. And then I have another level, a Brooks gap here as well. You can see they're all pretty closely aligned. Okay, so for this purpose of this, I'm gonna, well, let's just leave it like that. We've got, I know we're looking for 3, but the reality is you've got that level there. Okay, and then you've got 61.8, which is also pretty close to this level. So these levels are all very, very close. And if I do put them in, we want that one. So let's put that level in. You see how close that is. Okay, and put this one in over there. So all I'm doing is I'm taking the top of these tails, okay, and the bottom of these tails, and then the 61.8. Okay, and then obviously this upward trend line. So now immediately, let's just move this across. So we assume we're having this big engulfing red candle. So now to some people, they're looking at that saying, oh, that's it. We're going to fall to the floor now. Okay, and it is probable, but we're still in an uptrend. This uptrend needs to break first. So you play with the trend until the trend breaks. Okay, one thing I want to point out here is this strategy is not very well, I don't want to say defined, but it's not a high probability trade on the higher time frames. Okay, because on the higher time frames, especially when we're in a bull market, which for all intents and purposes we're still in a bull market, it can stay, the oscillators can stay grouped like this for extended periods of time. They can stay like this for a month. Okay, so it worked great on the low time frames, but on the higher time frames, you need to take what you see with a huge pinch of salt. Okay, so you can see here we've got a big engulfing candle on the 3 hour, and you would think that this is now going to be moving to the downside. Okay, but obviously you've got levels that you need to watch. Come back to the Bull Williams, you can see how we're bouncing off the midline of the Bull Williams. Okay, so trend is up. Right, so we've got our levels here. Let's just get down to the 6 minutes again and have a look at what were we looking for to get long. So I call it the story of threes because I think you've already picked up there's a couple of things about 3 that I've got in. So it's 3 levels, and I'm also looking for 3 pushes down. So here's my first push down to there, and when I'm defining a push at a breaking the Bollinger Band or on the Bollinger Band down here. So that's the first time it hits the Bollinger Band. This is the second attempt at getting to the Bollinger Band, and then we have a third attempt there. Okay, so sometimes it only does twice before turning, and other times it comes to the 3. The point is when it does 3 pushes down, it's a higher probability trade. Okay, so let's look at this. So firstly, from Bollinger perspective, we've had 1, 2. You can see how price is moving inside on Bollinger. So there is a warning going here. However, it does not, I'm missing my flat line. We'll just use the cursor. So if you look here on the cursor, so this is the first push, second push down. Look what's happening with my stochastics. They haven't grouped. They're still pointing to the downside. Okay, so there's no entry. So the probability here is that this is going to fail. Now, there's no level here either. So there is no long here. You should still be sitting short, and your stop would be above this tail here. Okay, because if it do break above this tail, then obviously this double bottom will come into play. So 1, 2, 3. So I'm looking for an attack at a level, and here are my levels. So in this area is what I'm looking for price action to give me a signal. Okay, so level is my first signal. My groupings of my stochastics here, so all of them are grouped together below the 20, well below the 20. It's sitting on the 6. Okay, so that's trigger number 2, or signal number 2. Signal number 3 is diversions. Look here. MACD is heading up, price is heading down. So I've got 1, 2, and a level 3. Now all I'm looking for is a fourth signal, which would be a great high probability trade, and I get my fourth signal as a pin bar. And for me, that is a pin bar. The tail is longer than the body, so that is a pin bar, and it's a rejection off a level. So there is an entry long here. Where's my stop loss? Stop loss, it can be right over there, 100 points away. And why am I saying right over here? Because I've got an upward trend line here, and I've got a second set of levels here. So just below here, and just enough that your spread doesn't catch you. So it depends what your broker, how your broker charges your spreads. So for me, I'd normally try and get between 40 and 50 points below the level. Okay. And you can see now how we move to the upside. Now again, the question is, where are we going to? So at which point do I have confirmation that this move is moving to the upside and I can move my stop up? Well, when we break through the alligator. So you can see here, we flirt with the alligator, we come back, we test it. We now break through the jaw, which is the blue line. Now I'm expecting a retest because you've got the 200 moving average. Comes back, it tests the alligator, bounces off, and now the alligator is all pointing to the upside. Okay, remember what I said? We're in an uptrend, so this is a high probability trade to the upside. This trade, the short trade, was a scalp. It was nothing more than a scalp, and you need to get that mindset. When you're trading against a trend, this is a scalp. Okay, now you can see what happens here. We form a couple of price action patterns. So there's a head and shoulders here. Okay, there was also a wedge break. Just draw it in so you can see why. Let's just draw it with a smaller one. You can see that there, and I can draw it like that. And there's my wedge break. Okay, wedge break to the upside, head and shoulders, or inverse head and shoulders break. Now the question again is, where are we going to? And for that, we come to the 3 hour. Now we've already got the levels that we traded off this morning. So what we need to do here is just get rid of that one we don't want to get rid of. I'll show you now what I'm trying to do. So essentially, the new level here was the morning's high, which is there. Okay, now I want another 2 levels. So I look to the left here, and I have one level there on that pin bar there. Keep looking to the left. Where's my third level? My third level is up there. Okay, but now there is another breakout bar here, which is this tail. So you might as well just add that as a level. So the first, let's get back to this area, and let's get back to the 6 minutes. Okay, so now once we've broken through the alligator here, and we are trending on the upside of the alligator, you can add to your trade if you want to. So why I say if you want to, it's really a matter of preference. So for me, if I'm trading this and we have a confirmation here and a pullback, and if we break this high here, I would add to my trade. And when we broke this high here, which was the inverse head and shoulders, I would add to my trade. Okay. And every time I add, I'm moving my stop up so that my risk stays the same. So, I mean, there's many ways that you can do it. You can either go in with a larger position here and then take profits as you're heading up. For me, I prefer to take a smaller position at my entry. Once confirmation has been received of the direction of the trade, I will add 1 or 2 positions to that trade. Okay, and so long as we're staying above the alligator like this, the trend is up, and we keep moving up. And bear in mind, I've created my my levels on the 3 hours, so that's my first level. And if you watch my other videos, you'll notice that when we fall short of the level like this, there's always a probability of us going to hit it. When we hit it, and it looks like it's rejecting off it, it's still not an entry to go short. Okay, so what you want to do is, all you want to do is you want to move your stop up to this level. So if it does bounce down, you lock in profit and you're fine. Okay, now you've got some warnings here. You can see the stochastics are grouping, and we don't really have diversions, but the stochastics are grouping at the moment, and we are at a level. So we 2 out of the required 3 for a trade. So the other thing to bear in mind is this is the 3rd attempt at this level. Okay, so let's just go to the 3 hour and you'll see what I mean. So that is the new high, right? But this was the previous day's high was the first attempt. Okay, then we hit it again to start the day, and we rejected it. So that was the second. So now in the 3rd attempt, we're looking for 3rd time lucky. And what you'll see here is we come to the previous high, which is the high of the previous day as well. We hit it, and then we break through. And you can see we break through the first 2 levels, and we hit the 3rd level to the upside. Now we've broken above it with a signal bar. This to me is a point to get out of the trade, because I've got a rejection bar here. It's above a level, which is cool, but being a Friday and at 4 o'clock in the afternoon, the US is now going to take control, and I do have a grouping here. I've got a level, I've got a signal bar, so it's not really a trade short for me because it's too late in the day, but it is a signal to get out of the trade. Okay, so that is kind of how I utilize this, and I can just show you another quick example before we go on Wall Street. So you can see my lines are still in from Friday. So I just want to go to the 3 hour just to show you this barbed wire nonsense that we had here. Okay, so first and foremost, we're in an uptrend on the 3 hour. Look at this. We're above the alligator. We are trending up. So any trade that you're taking to the downside is a short scalp, nothing more. Okay, so conservative traders should be looking for longs and only looking for longs. If you look at these 3 levels here, just come across to this here, you can see all these tails at the top. That's where I got my levels from. If we drill down to the 6 minutes again, and you'll see, I mean, let's just get rid of the noise. I mean, looking at that while it was happening, there's just chaos. I mean, that's barbed wire. But there are 3 signals here. So the first one is we've got a grouping, we've got diversions, okay, and we've got levels. So there are 3 signals. Now, your risk here is actually pretty low. So if I take a trade off this level here, I can take a 20-point stop loss, which is, if we do break above this level, with a close above this level, then probability of us going higher is there. Okay, but because I've got 1, 2, and a level, I've got 3 signals, there is a trade here short. Okay, where are we going to? Again, you need to define that on your 3-hour. And what you're looking for is immediately to the left, what are the previous tails. Okay, here are all my previous tails. So you can see how price has just been flirting with this area here. So there's a high probability that we're going to hit here. If we break below this, then we fall into these levels here. Again, onto the 6 minutes, and you'll see a fantastic setup here. So firstly, we break to the downside, we break through the alligator, back to test the break, down. There's Brooks gaps, there's a whole lot of other things happening on the 6 minute here. There's no real signals here. Okay, on the oscillators, you can see we've got diversions, but the big one here is the rejection off the level. You can see there the 3 levels, boom, down, and we have a proper pin bar here. I mean, it's a 45 point stop, 45 pip pin bar. Okay, so immediately you can see that that's a proper rejection off a level. We're having a crossover. We haven't grouped below the line, but we have crossed over, and we've got diversions. Okay, you can see how that's a double between this low and that low. It is a double bottom on the MACD, and price is heading down. So pin bar, off a level, diversions, group, crossover. So 4 signals here, and long. And you can also see the 200 EMAs coming into play. Where are we going to? Obviously back into this zone. Okay, so I mean, for the Dow, this was, you probably wouldn't have got, you wouldn't have got a take profit down at this level, but you would have seen the bounce happening off here and just got out. As soon as you saw it heading towards this area, you just take profit straight away. And then so that's 100 points down, and probably once you've got your confirmation here, back to the level 70 points up, and your stop loss here would have been 60 points or so. So that's my intraday strategy, and yeah, as I say, it works very well for me. And the only time that I really drill down to the 3 minutes is at the open of the South African market, the Aussie. It just gives me a little bit of a better scenario. But for your bigger, your higher volume markets like the Dow, the DAX, the S&P, etc., then the 6 minute works like a bomb. Anyway, guys, hope that helps, and I'll catch you later.